Goro Gupta, who is known by many as Mr. Opportunity, actually runs 21st Century Finance. And Goro is going to share some great insights tonight about how you can structure your finances and unlock potential that you don't really necessarily understand that is there. He's actually got a long background in the finance industry, in a family business in the finance industry, with great insight about what the opportunities are and how banks don't necessarily give you a clear picture of what's possible or how you really can leverage financial instruments effectively. Goro is one of these people who at a very young age started working on his personal development and his entrepreneurial skills. And after working with 21st Century Academy and working in the coaching organisation, actually saw an opportunity to merge his finance business with 21st Century Education operation. So they've brought that together, and now, Goro's sharing his expertise with thousands of people in terms of understanding what can be done with your financial circumstances today to take you to the financial circumstances that you really seek for yourself, to realise the potential, of course, of all these wonderful trading strategies that you've heard about the last 2 days. So wonderful for you to join us at this time of the evening. Goro's a fun guy, so I'm sure you're going to enjoy being here for the last session of the night. And I'll wrap up at the end and let you know about what you need to know for tomorrow. But for now, please give a warm welcome to Mr. Goro Gupta.
So glad time I spread my wings. Loving myself makes me wanna sing. Oh, yeah.
Guys, I want to thank you for being here. I know it's really late, and it's what's the time again, guys? Someone has the time? 10:15. Wow. So 10:15 or 9:15? Wow, guys, thank you. First of all, thank you for being here, and I really commend you all for being here and being so present. It's very important that you place an emphasis on your own education, and I'm here to be real with you. So I'm not going to go rah-rah. I'm not going to go all high-five each other. I'm just here to be real with you. That's why I started from here, not up there. So let's talk about finance. I know it's a boring subject, and I'll keep it as entertaining as possible. If my clicker decides to work, that is. Okay, so we're at the Financial Education Summit, and guess what I'm going to talk about? Finance. Now, before I start, there is a disclaimer, and it's very important that I read this out for anyone. Now, basically, 21st Century Finance refers all Australian clients and personal information to Trident Finance. That's a company that my family and I own. And I'm authorised representative of Trident Finance. Our ACL's over there, which is our Australian credit licence. And my Mortgage Finance Association Australia number is right there. Is there anyone that doesn't understand that? Okay, that's the boring stuff out of the way. Cool. So, as I mentioned, thank you for being here. It's very important that you educate yourself. And over these next half an hour, I'm going to educate you more than what most people get taught at school about banks and finance. So, let's talk about what I'll cover. I'll be covering finance and debt education. Types of loans that you could get, including a loan that the bank doesn't want to necessarily let you know about, and most banks don't even publicize. So, interest rates, credit history, why you need a broker, and potential income replacement. But before that, you've already heard about who I am. Most importantly, I believe in team. So my team's actually here in the crowd, attending the event, being part of this, not only this event, but being part of most of the investment strategies that you're either in or going to get into. So my dad, Bill, is just there. Just wave your hand there. And there's Robert over there at the back. So these guys are my family, my friends, and I choose to have them in my business, just as they might be in your lives. So my commitment to you and your commitment to me would be to play full out, to really engage and have fun with yourself, and myself, of course. Write down all questions and notes. If you've got any questions, feel free to ask them. I'm an open book here. Now, to see how it's applicable to you both now and in the future, whichever way, wherever you are right now. So, once again, to also imagine how you can change your life. Now, a little bit of a secret. I'm going to cover something interesting and something very basic just to get you guys rolling, to get the ball rolling. Now, who knows what good debt is and bad debt? Okay, good. I've got some hands up. Now, I'm going to put good debt over here and bad debt over here. Now, some examples of bad debt, guys. Can I just get a few shout outs from the audience? Fun? Car loan, okay. Great. Any other bad debts? Credit card, right. What else? Gambling, okay. That's not really a debt, that's just a bad habit. Some people will say girlfriend or boyfriend, but we won't go there. I won't write that down. What else, guys? Personal loan. So something I'm going to cover today is actually what you could use a personal loan for and how you could turn a personal loan debt into a good debt. But for right now, I'll write it down in the bad debt section. What's a good debt, guys? Okay. Even though you guys say it, I'm actually going to put it in here. Now, does anyone know why mortgage could be both a good or a bad debt? Your home loan. If it's your own home, why is it a good or a bad debt? Who's read Rich Dad Poor Dad here? Great. Guys, can one of you guys who've read the book tell me the answer? That's right. So a bad debt by definition, and really simple definition, is something that takes money out of your pocket. Good debt puts money into your pocket. In Australia, we're very lucky that it can be in both. But if you're in a country like America, it's definitely a bad debt. Australia, we're lucky. We kind of teeter on the edge. That's why if you listen to any of Jamie's programs, he'll even educate you as, rent the property you want to live in, own the property you want to make a return on. So that's why I put mortgage in the middle. But investment property, certainly. What else is a good debt? Any other ideas, guys? Great answer. So education. I know lots of people have taken education loans. I'm not necessarily talking about the HECS loans that the government gets you to get, but educating yourself alternatively is definitely a good idea. So with that done, you've got both good and you've got bad debt. Does anyone not understand that? Okay, everyone understands. Good. Now, most of us are uneducated at school, and I'll be covering a little bit more about what you should get educated on moving forward from here, because I can only give you a small snippet of my time here. We can educate you further on in the process later on, which I'll show you how to do. By the way, guys, just to let you know, I'm not here to sell you anything. I'm just here to provide advice in the best way that I can and add value. So the banks don't want to promote the loans that are right for you, because guess what? It leaves less money in their pocket. But as a good friend out there, so what was your name again? Tim. As Tim pointed out, having more money in your pocket is better by any definition, whether you're a rich dad or poor dad. So, the one bank trap. Most banks, who's got all their loans with one bank here? So a couple of people, and this information, what I'm going to share with you right now, is very, very important. Don't do it. Really simple, don't do it. Because what the banks like to do, they like to cross-collateralize. Especially if you're a property investor and you've got multiple properties, they like to cross-collateralize. Now, who knows what cross-collateralization is here? No one? Okay. Can you give me the answer? What is cross-collateralization? That's right. They like to blanket your loans into one loan. So what happens when you try to sell or upgrade one of your existing properties? It's going to be a lot harder than if it was with a different bank. So it's very, very important you don't put all your loans in one bank. And, most investors don't know this. So you're already ahead of most investors if you know this information, by the way. And it's all about setting yourself up to win. Now, before I go any further, what sort of loans can you get? You can get a refinance, self-capitalizing line of credit, personal loan, a car loan or an equipment loan, some bad debts, some good debts. We'll talk about how to turn them good in a while, and almost any other sort of loan. We're even pouring into US property loans, things like that. So if you've got any question about any sort of borrowing, come see us. Now, finance is usually the last piece of the puzzle. Usually you've picked your investment vehicle. Some people say property, other people say shares. Some people even want to do, Pete Bland's course back there. But how do you do it? It's all about structuring yourself financially. If you're not structured well financially or have the right sort of loan to be able to take the equity that you need out, then maybe you need to look at that first before getting into the programs, because it's effectively the fuel for the investment vehicle of the future. So I'm going to talk a little bit about, and not too long, what happened at the global financial crisis, because pre-2007, things were totally different. Banks were doing totally no-doc loans, interest rates were low, and it was a different world back then. So after the global financial crisis, by the way, was anyone here at the Harry Dent talk on the other side of the room? I know there's a few people there, and there was a lot of good information. So I'm going to cover a little bit about what Harry Dent covered. So in the global financial crisis, lending went backwards after it for about 15 years. It's now starting to come back out, but it'll still take about another 5 years to get to where it was before 2007. So most institutions have majorly tightened up lending, and their house values are starting to come in lower. I'm not trying to scare you, I'm just trying to educate you. So the question mark is, where will rates go? I mean, we all wish we had a crystal ball to know whether it was going to go up or down. Unfortunately, I don't know. And no one, not even the big banks know. As you know, we were all expecting rates to go a different direction to what they did in the last rate announcement. Before my tongue gets tied up. By the way, I'm going to have a little bit of water. If anyone else has got some water, it might be a good time to have one because I'm going to be going 1,000,000 miles an hour now. Okay, so, typical LVRs are starting to go down. Some places in Australia, they've actually gone down about 15 to 20%, and they're going to continue to drop further. Gold Coast, for example, has actually gone down about 30 to 40%. Okay, once again, when is the right time to refinance? Where's house pricing going to go? That's a question mark. So, you know what? When you're certain about where your house pricing is, maybe it's better to try to look at your house value then, refinance out then. That might be something good to look at. Now, while we're on the subject of refinancing, my team and I, we know what you're going through as we've already been there ourselves. We've bought multiple property portfolios. We've developed properties. So we know what it's like being in your shoes and being forward into your shoes. I mean, any smart person will tell you, and Jamie said at the start of the day, find out where you are, find out someone who you want to get to, find out someone who's been where you are, and find out someone who is where you want to get to. And Tim Ferriss covered this as well, and figure out how they close the gap. We've closed our gap. The way we got into lending as a family is we had to do these loans for ourselves. And the bank said, you're so good, why don't you become a lender? Oh, not a lender, sorry, a broker. And we are also a lender, by the way, which is a different story, which I'll cover later. Now, we've been through the journey. We've walked the same path. We find that most people also have the wrong structure set up, and I'll talk about that in a second. For example, cross-collateralizing. Most people have cross-collateralization set up purely because the banks don't educate them otherwise. Because what? It leaves more money in their pockets. Now, we can do low docs, and the no doc has actually returned for business. Is anyone here a business owner, by the way? Right? So, you know what? A lot of business owners find it hard to get loans. We've actually got some loans that have returned back into the market very, very recently that allow you to get some money out with providing very little documentation. Now, we can get LVRs of up to 95% without LMI. Does anyone know what anyone not know what lender's mortgage insurance is? I'm getting a lot of blank faces. Okay, I'll give you the answer anyway. So, lender's mortgage insurance is insurance that the lender asks you to take out to say that you're going to pay back the mortgage. It's usually a cost. And Robert, how much is it usually typically as a value of the house? Percentage? 2%. So, unless you've got an extra 2% to pull out of your pocket, which is not that easy to do for most people. Most people don't have that available to them. Or you could spend the money on better things, like a holiday. So, we can get LVRs of up to 95% without LMI. Not for everyone, but some people can get it. Now, we also have loans that most brokers don't have access to because my team and I, we come across a wide variety of people, not just, your everyday mums and dads, but business owners, investors. We see these people every day. And so we've had to have access, and this is why Jamie's got us on board, onto a lot of lending products that most brokers just don't have access to. Interest rates have gone slightly up recently, and we did have them at 5.99 for introductory rates. We've now got them at 6.3%. Okay, so now who's got a mortgage above 7% here? Right, come see us, especially you guys. Now, if your mortgage is above 7%, really come see us and see what we can do for you. Because if there's something we can do for you, it effectively means saving a little bit of cash flow. If we drop them by 0.5% or 1%, it immediately affects your cash flow. And at the end of the day, that's the name of the game, having more money in your pocket. Because that's what finance is about. More money in your pocket. Now, assessing rate I won't talk about. We don't have enough time here. I wish I could give you that value. I'll show you another way you can find out about the assessing rate. It majorly affects how your borrowing is structured. Basically, as I said, let's increase your cash flow. Would you be able to invest more effectively knowing what you're able to borrow? So if you were out there doing, Pete Bland's program and you wanted to take another $10,000 out, do you have that ability? Do you have that ability? You saw Craig Secker earlier today in the main stage. If you had that ability, you just take it out. It'd be easy because you'd make money on it. Trading with $2,000 or $3,000 really doesn't work. Trading with $20,000 or $30,000, then we're talking. And I'll cover that a little bit later. Now, by the way, before I go any further, I'm going to show you today how to have some income replacement. Who's excited about replacing their income, guys? Great, I'm in the right room. Just wanted to check. Who wants to live the 4-hour work week lifestyle? Okay, cool. Once again, I'm in the same right room. Now, I'm going to talk to you about one of the best loans available out there for most investors. So, you know what? Let's go for it. Self-capitalizing line of credit. Does anyone not know what a line of credit is here? Okay, most people know, but who knows what a self-capitalizing line of credit is here? And my team's not allowed to answer this. Who knows? No one knows, right? Here's the thing. This is one of the loans that the banks definitely don't want you to know about. Because if you wanted to live the 4-hour work week lifestyle, by the way, does anyone remember how many months holiday Tim asked people to take over the next year? How many months was it? 2 to 3 months. Do you think you can do that with a mortgage to pay? A little bit hard, right? Let me show you how you can do it. So very simply, a self-capitalizing line of credit is a line of credit that pays its own interest off from what it's got available. So let's pretend you have a line of credit for $100,000. You've only borrowed $20,000 out of it. Usually most line of credit, you have to pay interest on that $20,000 every month. What a self-capitalizing does is it automates the interest payment. So if you want to go on a holiday for 2-3 months and take a mortgage holiday, no problems. It's already done. It's already set up for you. You can continue paying it, or it can continue paying for itself. And yes, you do have to pay that figure off, but at least you're safe to take that holiday. Who finds it a lot less stressful not worrying about a mortgage and taking a holiday? We're all in the same boat here, right? And look, has anyone seriously heard of this kind of product there? It's not. But if you come to our team, the first kind of line of credit we set you up with, or we look to set you up with, and now everyone's different, but the first product we look to set you up with is one of these. That's standard across the board. Who's excited about that? Cool. Now, we have a product available for senior citizens. I won't talk about it. None of you senior citizens that I know of. You're all way too young, guys. But we have a product available for senior citizens. Unfortunately, it's only up to 20% LVR. Now, why should you refinance or get a line of credit with us? We find 70% of our clients on average have been structured wrong. So even if you're not confident about where you are, or even if you're confident about where you are, come see us anyway. We'll give you a quick loan assessment, and we'll tell you if it's right for you, it's right for you. If it's not right for you, whether or not we're able to help you out personally, or we're able to give you the right advice, we'll still give you that advice. And it's absolutely free. Who's excited about that word, by the way, free? Okay, cool. Right, I'm in the right room. Now, you should really look at your situation once every 18 months. What a lot of people do is they either look at the situation once every 5 years, or they look at their financial situation once every 6 months. Too soon or too late has a detrimental effect. Too soon means you get a lot of credit hits on your file. And credit hits are very, very bad. Guys, it's very important. Write this down and repeat after me. Credit hits are very, very bad. What are they, guys? Okay, cool. We've got the lesson. So, was anyone taught this at school, by the way? Okay, good. Well, you wonder why, because your credit report is the most important thing in order to become a successful lender. Oh, sorry, successful investor. Lender as well, but that's a different story. Now, if we could increase your cash flow by structuring yourself correctly, wouldn't that be worthwhile? Robert, do we have an example of a client that we've saved a little bit of cash flow for? That you can, just by restructuring their loans. Can you take one off the top of your head? Okay, he'll think of a couple of ideas and come back to me. I'll put him on the spot. Okay, now as I mentioned, where are housing prices going to go? Are they going to go up or down? My hallucination is that if you live in Perth or Queensland, you probably need to get them refinanced sooner rather than later, because they're going to continue going down according to Harry Dent. Now, rest of Australia seems pretty safe at the moment, but you also don't know where it's going to go. So check it out, see what you can get. If you've refinanced 5 years ago, come have a chat to us. See what we can do. Personal finance. Now, here's something that's a little bit uncool that, let's go back to our previous slide, is usually considered a bad loan, right? Personal loan is usually considered a bad loan because what do the banks give out personal loans for? Good debts or bad debts? Mostly bad debts. I'd say about 90% of personal loans are given out for bad debts. But what if we could use them to restructure yourself? And I'll cover that right at the end because it's very, very important. So if you are looking to invest in a program and you see something over the period of this weekend that interests you, or you find another investment vehicle that sits right with you, you can actually get an education loan for personal loans. But here's the thing, once you get the loan, the banks don't really care about what you do for them. So you can get a loan, no problems. You know, $5,000 to $40,000 within 48 hours of signing off. Personal loans are fairly easy to get, and they're large amounts. Australia's one of the luckiest countries when it comes to this product. You go to America, you go to New Zealand, it is just not available. An unsecured personal loan over $2,000 is just not available in most countries. We're lucky. We can get up to, I think, $20,000 unsecured. Well, if you don't have any assets. If you do have assets, we can get up to 40 to 60. What's the largest loan we've done actually? $60,000 for a personal loan. Right. So, I mean, we're conditioned into interest rates. What I'm saying is worry about how much money's in your pocket rather than the interest rate, because it's about cash flow and how much money's in your pocket. This is what the successful investors teach. It's what Jamie teaches. It's what Robert Kiyosaki teaches. I'm sure if you ask Tim Ferriss what's more important, a rate or how much money's in your pocket, what answer is he going to give? What's in your pocket? Good. So, look, is it actually worth refinancing for a small amount? So if you only need $10,000, trust me, you don't want to go through the hassle of refinancing. All you want to do is fill out a little bit of information, hand over a couple of pay slips, and that's it. That's all it requires. It's all that's required for a personal loan. You know, if you don't have asset backing, by the way, who here does not have a house? Right, good. Personal loan might be a product for you guys to get into some sort of investment vehicle. And it's important because it's about leveraging off. And leverage is, you can get that from personal loan. Look, rates are from 13.5%. But here's the thing, if you're making more than 13.5% or whatever that rate is a year, you're on top. It's about opportunity. Whose piggy bank looks like this? Right. So, it's for people that want to maximize their opportunity. And look, at the end of the day, let's be real. Why be stressed when you're investing? Does it really make a difference if you're paying a little bit more interest when you're stressed? Invest with freedom. That's what's important. And look, it's about getting the results right now. And also for those who are time poor. Now, who can get a loan? 18 to 65-year-olds. We have loans that over 65-year-olds can get. 1 year consistent employment or 2 years self-employed and can show tax returns. We do have availability of low docs for business owners and no docs at back. Guys, if you're business owners and you don't have any documentation, don't worry. Repeat after me. Don't worry, guys. Okay. Now, disclaimer, a personal loan is generally in nature specifically not for investment purposes. It may assist in clearing off other debts. This may in turn allow you to use the original funds for investment purposes, and this is for Australia only. A lot of jargon. It's basically saying, don't use the loans for investing or making yourself better. Does that make sense? Okay. But what you do when the money's in your account is up to you. You know, Pete, we got you a loan not too long ago. How much was that? 20 grand? There you go. How much are you making on that, Pete, by the way? That money with your insurance program? There you go. So if you're paying, hold on, let me just do the maths. If you're paying 15% a year and you're making 5% a month, do you have more money in your pocket? Okay, good. Common sense. Once again, common sense isn't too common because we've been conditioned into worrying about rates. Don't worry about rates. Worry about what's in your pocket. That's what I'm saying. So as long as you haven't been visiting this place too often, you should be good to get a loan. So does anyone visit this place often? Okay, good. I'm in the right room. Now, credit rating. Here's the new credit rating. By the way, most brokers don't even know that this is out. We actually did one for a broker the other day. This is a brand new credit rating system that only the brokers can see. We've moved to an American-style credit rating system where it gets a number. It's not really effective right now for a lot of people, but in about a year's time, we'll all be scored. And it's very important to keep your score high. How do you keep your score high? Don't shop around. You shop around, you're going to get more hits on your credit file because every time you shop around, the banks put a hit on you, inquiry on your file, it lowers your score immediately. Okay, and the more you shop around, the more it lowers your score. Anything under a 400, good luck getting a home loan. Or if your credit file's too new, good luck getting a home loan. Or if you have absolutely nothing, if you don't have any credit history at all, and I'll cover this in a while, you're not going to get a loan easily. It's going to be very, very tough. But we've got ways around it. If you want more advice on this, I mean, I'm not going to cover this too much, but basically I'll show you how to get your own credit score, or not score, but your credit report, and I'll cover that. That's right, Vic, go for it. Now, a couple of things that's on there. It tells you your addresses, employers, all the information's there. That's us, by the way, Try and Finance Brokerage. Our inquiries don't really lower the credit score that much. They might lower it 1 or 2 points, if anything, which is nothing compared to what a normal credit hit lowers it. Because we're brokers, we've got a special license available to do that. Now, whose piggy bank looks like that, guys? Also, we also have credit reports that look like that. They need repair. So, look at the credit rating. Who here does not have a credit card? Okay, I'd suggest, Arun, go get one. If you get a credit card, get a smaller one. So at least you're building a credit system, a credit rating, a credit report. Because the banks want to see that, yes, you're a good creditor. So does that make sense? Just to get a small credit card, don't go out and get a $20,000, $30,000 credit card because it's not necessarily going to make sense to you. Because what do the credit cards usually get used on, by the way, guys? The good or the bad debts? Okay, right. So get a credit card, get a small one, use it, overdraw on it, not overdraw, but over deposit on it, do the opposite, use it like a debit card if you need to. Now, if you have no credit history, which no one here does, we've got services available there, and does anyone have a credit default on their file? If anyone does, come see us, we can take care of you. My team and I, we're experts in that. We've got people that we can refer you onto that'll really help you fix your credit. So if your credit looks anything like that, we can work on it. Now, by the way, guys, jot this down. Jot down this website address, www.mycreditfile.com.au. It's very important. Check out your own credit history. It does not lower your points at all for you to check it up yourself. You can get the free one in 2 weeks, and a paid one comes immediately to you if you pay $50 for it. Okay? Get it checked out. Just make sure you've got no defaults on it. I mean, we've had people that have had phone bills from 4 years ago that they didn't know about. Unfortunately, they got declined for their loan because of that. Might have been a $200 phone bill. Get it checked out. I encourage everyone to educate themselves. By the way, was anyone taught this at school? Okay, just even the younger people out there at the back, were you taught this at school? Right, I wasn't either, and I'm fairly young too. So, I mean, it's important to educate yourself. We don't get educated on this stuff. And this, who knows that? Okay, let me just common sense corner here for a moment. Is it or is it not important to use leverage in investing for all those savvy investors out there? Is it important? Yes or yes? Okay, so if you have bad credit, how the hell are you going to get leverage? It's very, very important to become successful. Also, don't quit your job just yet. We talked about the 4-hour lifestyle. Don't quit your job just yet. Because you know what? After you quit your job, it's almost impossible to get a loan for 2 years unless you have another job. If you quit your job because you're tired of your job, come see us before, not after. Come see us before you've quit the job, get the loans, and then do whatever you want. Because what happens is that you're not able to get a loan if you're self-employed for 2 years most of the time. We have some loans available now, but you can absolutely not get a loan, especially a personal loan, if you've been in self-employed for less than 2 years. So, the banks look for stability in place and job at the end of the day. So if you're secure, then yes, it's easy. But if you're not secure, you've just moved jobs, come see us before you plan to quit. Ideally is what I'm saying. So have you dealt with the banks before? Can they secure themselves? Remember that cross-collateralization we were talking about? The banks look to see if they can secure themselves. And if you don't know how to word the paperwork right, you can cross-collateralize without even knowing. Once again, fill out. Who likes paperwork here, by the way? Okay, right. Rob, your hand needs to be up for that one. Okay. Rob there and my dad Bill, they love paperwork. That's why they're on my team. They love paperwork. Rob's got both hands up, right? No, seriously. Guys, I don't like paperwork, just like you. I'm the same as you. I don't like paperwork, and you know what? You don't need to. We're here to help you out with all that paperwork. Now, who knows, once again, do the banks want to educate you necessarily about how to structure yourself as a better investor, or do they want to educate you on how to structure yourself so that they become better investors? Once again, who is really working for you? And that's a question that you need to ask. Does your bank manager like to bend over backwards like that? Right, I'd get Rob out here to do backflips, but I won't right now. But that's basically mentally what we'll effectively do for you. That's what Jamie's decided to partner with us. Now, we know what the banks look for, and we're successful ourselves with various strategies. We've done all the strategies, for example, for ShareLord, Forex, E-minis. We've done quite a lot of strategies, property investing. That's where we started. Development. We've been there, and we've done that. So we know what it takes to get it done right. Because, by the way, most mortgage brokers I know don't own more than 1 or 2 houses themselves. Why don't you speak to a mortgage broker that owns a portfolio? Because at the end of the day, it's important to find someone that's gotten to where you want to get to. It's the truth. Now, we know about your investment vehicle, and we've been able to get finance for those that have previously declined, even from the same lender. Rob, that client that we had a couple of months ago, how long ago was he declined from that lender that we got the approval for? 3 days. All because the paperwork was wrong. We just fixed up the paperwork and we got the lending approved. So it's important. Lending is very important. So we've got negotiation power with the banks, and that's one more reason why we were able to get it approved with the lender, because we had negotiation power with that lender. Now, we don't have negotiation power with every lender, but we've got about 35, 40 lenders that we deal with on a regular basis. So that's usually more than enough. Now, once again, we know how to fill out the paperwork, how to make it right for people. Oh, sorry. And we understand the bank's criteria. Now, as I mentioned to you, it's dangerous to shop yourself. Not only is it dangerous, but you waste your time and your money. So if you do want to find out rates, either come talk to us or just have a conversation with someone on the phone, and don't authorize them to touch your credit file. Do not authorize them to do that. Now, question is, who's vested in you? Yeah, we get a commission. Let's be upfront about that. We get a commission, but we get most of the time the same amount of commission from one lender to the next. And my company's goal is to educate you first and worry about commission second. Rob, on average, how many times a week do we get clients that we get absolutely no commission for, but we give them advice? How many times a week, Rob? How many times a week? 6 to 8 times a week. We just receive a warm, fuzzy feeling inside, and that's it. While the warm, fuzzy feeling's good, we just want to take care of you at the end of the day. Because we know that if you don't deal with us now, you, your relatives, your friends will deal with us in the future. And that's what's important, creating goodwill. Now, guys, I don't have very long, so I'm going to really rush this along. Line of credit, cash out, credit card facilities we can work on. We're not biased. We are not authorized to be biased. We get paid by the banks and work for you. We've got a Swiss knife of rates and products, and we help you increase your cash flow. But you already know that. But let's look at a couple of testimonials. So Paddy, and I'm not going to bother trying to pronounce his last name. I should give a prize to someone that can pronounce it that's not Indian. He's a manager at ANZ. So guys, what kind of clients are we dealing with when you've got managers at ANZ that we're able to get better rates for? We're able to get a better product and a better rate for someone that's already a bank manager. And believe me, he's not our first bank manager. Our last bank manager was how many months ago, Rob? There you go, guys. When you've got bank managers coming to see you, you know you're onto something good, especially if you work in that space. So, another testimony, Jordan, he's a successful investor. He's trading in a product that you'll see Nick Halleck promote tomorrow called ShareLord. Now, he's making 6% a month. Now, he was going to take money out of his trading account, go traveling with that money. But you said, you know what, Jordan, why don't you keep making your money, keep making your cash flow? We'll get you a personal loan. Yes, it might be a bad loan to travel, but at least you won't have to pull it out from your trading account so you can make more money. You can keep making that cash flow to fund your lifestyle. You can keep growing your nest egg. And Jordan's what? How old was Jordan, by the way, Rob? And he was at an event in Melbourne about 6 months ago, sitting exactly where you guys are in a slightly different location at Flemington. Now, I don't have very much time, so I'm going to go through a really quick hypothetical scenario. I was going to get some human calculators and scribes, but I'm not going to. And I'm going to go through some income replacement. First of all, who wants to learn about income replacement here, guys? Cool. Okay. So I'm going to ask for some feedback here. Now, does someone want to volunteer to be my human calculator? Come on. I'll give someone a free present if they want to be my human calculator. Come on, guys. Okay. No worries. What was your name? Guys, give Scott a hand. Okay. Now, is anyone here trading a successful strategy? Successful strategy. Is anyone here trading at all? A successful strategy. Fun? Okay. Let's look at a successful strategy. Okay. Well, unfortunately, it's going to be slightly biased because it's from my own team, but we're trading successful strategy, right? How much percent should we average a month? 3 to 4? Okay. Let's use 4. Is that fair to use as an example here just for now? 4% a month. Really conservative as a strategy. So we know that if we borrow $20,000 as a personal loan at 15% interest, by the way, you heard Pete Bland back there say 5% as well. So you know that these returns are definitely possible. So, and I'm going to get on the board here. So if our cost of interest at 15% is $475 a month, that's including the principal, by the way, $475. And my handwriting is really good. I should have been a doctor. And it's for debt repayment purposes only. You're not supposed to use this money for trading, but once it's in your account, it's up to you what you do with it. The responsibility is all yours. Now, what's the investment return? So just quickly, we're not going to compound it, but let's say 4% of $20,000. How much is that a month? No, he's the calculator. Sorry? No, that's all right. $800. Okay, cool. Now, if we multiply 800 by 12 to give us a yearly figure. Actually, you know what? Before we do that, let's take away 475. By the way, can everyone see this, or am I? Everyone see this? So can we take away 475 from 800, please? What's the figure there? Yep. 325. Okay, what's 325 multiplied by 12? What's 325 multiplied by 12? Pardon? 3,900 a year. So, whose holiday is worth 3,900 a year? Guys, I've just shown you how to get a free holiday. Tim Ferriss said 2 months. There's your 2 months right there. I know you won't necessarily get the best holiday, especially if you're a family, but it's a holiday. There's your 1 or 2 months away. I've just shown you how to do that. Is that exciting or is that exciting? Now, who's ready to come to income replacement? Who'd like another income in the house? A third income, second income, whatever. You know, Harry Dent talked about the reason why we're not having as many children, which is also giving us a decline in economy, is because we're forced to have 2 incomes in the household. What if we could have 2 incomes with only 1 person working? Wouldn't that be cool when you could focus on your family? So, you know what? Let's talk about that. Now, by the way, was our cost of business lower than our expected profit? Yes or yes? Did we make profit? Okay, good. Now, the best part's still yet to come. Refinance time. Most of the rest of the room have got a house here, correct? Okay, cool. So let's refinance our property and get a line of credit of 100K. Now, that line of credit, we pay off the existing loan, so the existing loan does not exist. Typically, refinance takes between 1 month or between 2 weeks to 3 months. So we could get a personal loan in that time, get it taken care of, make income on it, easy. We can pay off the existing personal loan, and I won't even compound it at the moment. I know I've got written compounded there, but I've run out of time. But 4% of $100,000. Can we have that figure? should be a really easy one this time. 4,000. Okay, 4,000. I've gone ahead of, what's 4,000 times 12? 48,000. Guys, now, even though that's an extra income, I haven't taken off all costs, so I don't want you to get too excited just yet. I've got one last job for you, Mr. Calculator. What if we take off our interest of 7,800? So I'm just going to flip to the next page. Harry, shh. $40,200. Guys, is that not an extra income in the house? Who'd like an extra $40,000 here? Okay, good. I've just shown you guys how to make it. It's that simple. Invest it right, invest it wisely. Take some money out if you've got the access to it. Take it out. Don't be afraid. Get yourself into the right vehicle. Try it out. Make sure you're trading with a successful strategy, right? So hang out this weekend. There'll be some good strategies over here, good testimonials. Talk to people that have done the right program and make yourself successful. Use leverage. Get yourself into the right loan product. So that's potential income replacement, 40 grand. That's a household income.